This is clean. It isn't that I don't like miners, but miners are vulnerable. We can look at what's happening in Africa or elsewhere, really, with additional royalties. There are all different ways that these companies can be confiscated, right? Extra royalties, extra taxes, etc. So no, I don't personally think that mining stocks are safe inside of a crash at all. I don't think any stock is safe inside of a crash. And you might notice that even the spot gold and spot silver markets, these are paper contracts. They can be sold and bought like that, right? In the physical world, it takes a little bit longer. It's a different market. Remember that the blue line is the 50-day moving average. That bottom red line is that 200-day moving average. And remember when we talked about it, I said that the price was very stretched above. And so it can only go so far above or below before it's coming back to that 200-day moving average. Okay? And what you're witnessing here is when it reached that peak and it was so extremely stretched, it just pulled back and stayed within a narrow range, giving that 200-day moving average a chance to catch up. Can you see that in this chart? Because you'll see the same thing in the spot silver chart. Let's see, is it doing, oops, went way too far. Oops, sorry. Okay, and this is the spot silver chart, and you see that same kind of behavior. So remember that 200-day moving average kind of acts like a rudder on a boat. And if the spot price of anything, it doesn't matter whether it's spot gold or silver or the dollar or Bitcoin, which we're going to see in a second, or stocks or anything, when it gets overstretched, you want that $200-day moving average to continue to move up and just let some of that steam out of that price target.
Welcome to Economic News, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and send us super thanks if you find our daily recaps valuable. Enjoy the episode.
So that's what's happening with both spot gold and spot silver. Not an issue at all. Now, I thought that this was really interesting. This happened this morning. Bitcoin traders are still rattled after $340 billion wipeout. And let's take a look at that chart. Okay, this is all the same time frame. And again, you see that red line on the bottom as that 200-day moving average. And you can see how stretched it was. And you also see that 50-day moving average on the blue line. And you can see how the spot price went above and below that blue line for a while. And now it has dipped below that 200-day moving average. So some are saying that this is the reason why Bitcoin doesn't have the momentum to move up further, at least at the moment. So we can keep an eye on this, but the difference between the two or the three of them should be pretty clear, because really what we're looking at is spot gold and spot silver kind of sorta represent gold and silver. Not really, because neither one of them reflect the true fundamental value, and that's true for spot Bitcoin as well, the Bitcoin to the US dollar. The difference is it takes energy to create both of these. This energy is used up here, and the energy is held here and can be used an indefinite or amount of times, because gold is indestructible. We know the true fundamental value of this
because it's based on how much of this rubbish governments issue and how much of this sound currency exists in the entire world. We don't really know what the worth of this is yet, because it's going through its trial. Maybe now we'll see. But just keep that in mind. And I just wanted to start this with a little technical lesson to reinforce what we were discussing before I left for Florida and in Panama. I also thought that this was fascinating, and I wanted to bring this up, that we have a murky economic outlook. Well, look, we already knew that the reportability was not great before all of those workforce cuts and the government shutdown, which is now in its 42nd day, the longest government shutdown in history. And let's just kind of look at where we're at with that, because the division among Democrats puts Congress on a path to end the U.S. shutdown. They really didn't get anything that they were requesting. But you and I, well, we've had to cope with the government shutdown. And maybe it hasn't affected you on a clear level, but there are those that it really has affected. And I'm telling you, and I cannot reinforce this enough, food becomes the single biggest concern during these transitions. That's why I became an urban grower. That wasn't really what I wanted to do, but knowing that food is a very big issue. And, U.S. again seeks to stop food aid. These are things that have been going on. While we are getting more tax breaks for the affluent, IRS quietly withdraws limits on loopholes. The Treasury Department and the IRS, through a series of new notices and proposed regulations, are giving breaks to giant private equity firms, crypto companies, foreign property investors, insurance providers, and a variety of multinational corporations. The provision, the Corporate Alternative Minimum Tax, was passed by Democrats, and it sought to stop corporations like Microsoft, Amazon, and Johnson & Johnson from being able to report big earnings to shareholders, yet low tax liabilities to the federal government. These breaks come in addition to the roughly $4 trillion package of tax cuts that President Trump signed into law in July. Here we compare. Gold and silver are physical, historically accepted stores of value. Bitcoin is digital, still proving its function. Gold's worth is tied to the amount of sound currency versus government paper globally. Silver, likewise, has industrial and monetary uses. Bitcoin, while potent, is still under trial. It relies on confidence in the network, adoption, mining cost, and regulatory clarity. In a chaotic macro world, it faces extra dangers. So when you analyze portfolios, weigh gold, silver as bedrock, Bitcoin is high volatility complement. Do you see why it is so critically important for you to be as independent, to become your own central bank, but do it inside of a community to provide stability in food, water, energy, security, barterability, which really my preference is silver, but in any form. And I want you to also realize that anything that you have that's physical is barterable, as well as your abilities. So this could be a good time to learn some skills, wealth preservation, which for me is primarily gold. But again, you need to maintain your standard of living, and community is going to come in to help you create that stability. Community, arguably the single most important thing that I talk about these days, and shelter. Get it done. All of this back and forth, the government shutdown. Okay, now maybe it's going to be open again tomorrow, but that's just to fund the government for a couple more months, and then in January, are we facing another shutdown? And what does that do to global confidence? And the globalists, go global governments, global corporations, really wanting to buy our debt. That right now, look at it. And this has been true for a while, but never so true as it's been over this past. Not even a year yet, right? The foundation of the global monetary system, the 10-year treasury, is going like this. If you're going to build a house, do you want to build it on a fault line like this? Or do you want to have confidence that it's on bedrock? Beyond charts and commodities lies the macro backdrop. We have a lengthening government shutdown in the U.S., tax breaks favoring the affluent, and global debt under pressure. All of these threaten confidence. When trust in the system weakens, bedrock assets matter. Build on sound currency, not shifting sands. Stocks and mining firms can collapse in a panic. Even metals firms, mining stocks, carry company risk. Gold physical carries counterparty risk, storage, authenticity. So you must think broader. Community, barterability, food, energy, independence. Those build resilience alongside the financial. Sound currency is bedrock. Sound currency is money that the governments and the central bankers cannot inflate away. And gold, particularly redeemable gold in the system, requires fiscal responsibility. So you can't have all of these giveaways in the system, because not if you have redeemable gold in there, because if you and I saw that and we didn't like it, we'd simply pull the gold out of the system and create more restrictions. So you're not going to have a $10 trillion Zimbabwe note that you can't buy anything with. And the dollar is that way too. So let's see what happens tomorrow. But even if the government shutdown ends tomorrow, can it really easily undo and turn back the clock? No. There's an awful lot of harm that's been done over these last 42 days. Even if these people get their back pay, I mean, it is a trickle-down effect. If people weren't getting paid and they couldn't pay their bills, that means you've got more defaults, more late payments. It's a problem that impacts everybody, whether you see it directly or you feel it indirectly. Fortunately, my daughters went to Florida and they're coming back today. And, Phoenix is one of the airports that had to close down a lot of the flights. And fortunately, they already texted me. They're on a plane. They don't have any layovers, so they're going to make it home. But I was questioning whether or not that was going to happen. And that's all due to the government shutdown. Plus, they're understaffed anyway. So what's the takeaway? First, monitor technicals, especially the 200-day moving average across asset classes. Second, recognize that gold and silver offer a more predictable store of value in uncertain times. Bitcoin remains speculative. Third, reinforce your broader strategy. Maintain standards of living. Engage in community. Develop skills. Secure physical assets. And stay adaptable. Markets shift fast. The recent crypto crash reminds us of that. While government policy and global finance wobble, you should anchor where you can, because when the trend finally breaks, you want to be ready. I could tell you I was there on Black Monday in 1987, and no matter how rock solid or safe I thought those stocks were, when you have a major market meltdown, everything melts down as well. I could probably pull up, or if you call us and you ask, or if you have a strategy specialist or you talk to one, they can send you a chart on what happened in 2008 between the collectible coins as well as the spot gold market and the miners index. It's still a stock. It's not gold. You don't own gold. You own shares in a business, and you don't know how they're managed.
Don't forget to like our video and subscribe for our channel.